Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Am I audible?
Yes, very much.
Yeah. So, very good evening to all of you for having come over to this program of Manthan. And let me thank Ajay and Vikram for having given me the usual slot, which they have for the last so many years. This has been quite an important budget because of the fact that it has had quite a few encomiums showered since morning, including the markets having welcomed this budget. But let us look at the indirect tax side, because we will be covering some aspects of customs, some aspects of GST, and also what we make out of the revenue collections on the indirect tax side so far. So let me start there. And just to put it in perspective, if we talk of the, we would be concentrating on the bottom portions of this circle and the semicircle, particularly to highlight the point that we are talking about 23 paise, 26 paise in the rupee, whereas both corporation tax and income tax would constitute the remaining 27 paise, which really is the tax revenue which we are talking about. In other words, less than 50% of the total tax revenues, which you see on this chart, is the goods and service tax, union excise duties, and customs, which is what we will focus on, because that is nearly half the revenues that come to the center. The economic survey talked about shortfall in collection, which is made up by the excise duty growth of nearly 48%. And you will see that from the budget estimate of 2.67 lakh crore, the excise duty is 3.61 lakh crores in the revised estimate. That is the sort of money that has gone into on account of the excise duties, which are basically on account of petrol and diesel, which inure to the central government. So nearly 1 lakh crore between the budget estimate and the revised estimate has already gone in. And that is why the survey said that nearly 48% growth in excise duties and shortfall in collection was made up on account of that. They have talked about COVID measures, extension in compliance timelines. I must comment here that there was this Taxation and Other Laws Extension of Time Limit Act of 2020. And Section 6 permitted authorities to issue notices till the 31st of December. And so much for trust and confidence of the community, tax-paying community. There were a host of notices on the 30th of December, 2020. And on every score, so that the time limit, as far as the department goes, gets extended. So while the survey talks about the good part of the timeline having been extended, it has not looked at the practical reality as to how the time limit has been further extended by the department issuing notices on the last day of the extension which was granted under the 2020 Act. So if we are to build this trust, there must be some mutuality in this process, and that is where you will find this mismatch. And again, on faceless customs assessments, there have been innumerable problems, but again, it has not been addressed squarely in the context of these the procedural changes that were made in the context of customs, because you no longer meet the authority, you don't know who assesses, and therefore, to that extent, there is this again the what I could call the link, which is not the de-link, which has taken place between the assessee and the department. Where does the money come from? You will see that customs duties go up from 1.12 to 1.36 lakh crore, revised estimate, and when I say the right-hand side is the budget estimates for 21-22. Excise duty, I've already talked about, 3.61, coming down to 3.35, but then with the cess effect of nearly 26,000 crores, which will be now used exclusively by the center. In fact, the Revenue Secretary, Finance Secretary was repeatedly asked about this, and they said that this is only an adjustment for the erstwhile special excise duty. But the fact of the matter is that this is again revisiting of cess in order to see that it is exclusively adds to the center's kitty. GST, the 1.2 lakh crore of January is projected from 5.15 in the revised estimate to 6.30. A big exercise in terms of, and you will see that the measures being further taken, like when I deal with the specific proposals, the penalty on e-way bill is not 100%, it is 200%. If they catch your truck on the way, there will be a penalty of 200%, which you will need to pay. And that is the sort of coercive steps which have been taken, which they believe has really helped us in getting this sort of revenue buoyancy, which we'll see entirely coming from the GST share. And of course, the gross tax revenues just grow from 19 to 21, which is not nowhere in the 20% range that we have seen on the GST side. But that is how the math plays in the context of both customs and excise and GST. What are the key changes? On the customs side, you have the common portal now, which is a very welcome measure, but it should work and bear the load as we have seen in the past. The sunset notifications, they are going to plow, and how much this is going to yield, we really don't know. There is no estimate of this. 400 notifications are to be dispensed with exemption notifications. Time limits for completion of certain actions, but we have seen that these time limits are hardly, and again, there are time limits set by the authorities to beat these time limits. Tariff changes have been made in the context of duties, which will be immediately imposed from 2nd of February, carbon black, builders plastics, polished synthetics, stones, parts of mobiles, all this with a view to getting the MSME incentives and the Atmanirbhar. Changes in trade facilitation rules, particularly those relating to rules related to manufacture and concessional rates of duty. Those are welcome measures because there have been bottlenecks, particularly in the context of manufacture of coaches for the metro rails, and I think it is a welcome measure in that context. Exemption on certain goods, as I said, have been straight away withdrawn, and I have put them a big list just to show that we don't still have a math on how much these exemptions are going to lead. And of course, initial setting of solar power generation and this agri infrastructure developments, as I've talked about it, already when I talked about excise duty. A portion of that will straight away get into the center's kitty in the form of cess. Mobile phones, then exemptions to steel, scrap, again for MSME, and you must have heard the giants of steel industry in the morning, who said that they are quite happy with this dispensation. 400 plus exemptions, as I said, and a new duty architecture. FM has promised that inverted duty structure in the case of GST will be addressed. It's a big eyesore, not only eyesore, it's also a pocket sore, and therefore to that extent, it needs to be addressed. Coming to GST, clubs, associations were wanting to bark on the mutuality route laid down by the Supreme Court in the case of Calcutta Club. That is gone now retrospectively from 1st of July 2017. Then whatever changes in GST they wanted to make, like linking input credit with supplier details, which was instituted by rules, is now part of the Act. Mandatory audit provisions have been removed, self-certification has been brought in. Interest on net cash liability, which was a long overdue amendment from 1st of July 2017, has been brought in place. And as I said, following up with the e-way bill penalty increase from 100 to 200%, several provisions of seizure, confiscation, provisional attachments have been rationalized in order to give the teeth for the purpose of, again, enforcement in the context of GST. Coming to the SEZs, it has been restricted to only a certain select items which are to be notified by saying that I can pay IGST when I make a supply, zero-rated supply to, again, to curb the use of credit which has accrued, so that you don't use that credit for the purpose of paying the tax, output tax, namely IGST. Linking foreign exchange with exports and only for authorized operations, and how they are going to, because there is already an automatic list in the context of SEZs, how this is going to be operationalized will have to be seen. Well, those were some of the key ideas and findings from the budget, which I wanted to share with you. And of course, I will be available if there are going to be any questions. Thank you very much.
Thank you, Thirumalai, for that succinct explanation of what happened in the budget for indirect taxes. And may I now request Ajay to take over and make his presentation on direct taxes. Ajay. You're muted, Ajay.
Good evening, friends. I'll take you quickly through some of the changes that the Finance Minister has proposed for the direct tax measures. And there are not too many that should impact you all, but it's better you may know some of them. So here it goes. There has been no change to the income tax rates that are applicable to individuals or companies. The rates remain the same as last year. The rates for senior citizens also remains the same. And for the very senior citizens, they remain the same as before. But one change has been brought about with regard to very senior citizens, that is those who are 75 years old and more. They need not file the returns if their income includes only pension income and interest in the same bank account as the pension comes in. So if that is the only income that a senior citizen above 75 years has, then the income tax return need not be filed by the senior citizen, and the bank is expected to calculate the correct tax and deduct from the income that the bank pays to the senior citizen. This is an important amendment which can impact partnership firms. So far, it was believed that when a capital amount is received from a partnership firm on dissolution of the firm, the extra is not chargeable to tax because it is not a capital gain. And people used revaluation of assets as a means of reducing the amount of tax that was payable. That changes this time, and this will now make sure that all money received by partners on dissolution of a partnership firm gets taxed in the hands of the partners. A major change that has been brought about is about the right of the department to reopen assessments. The time limit has been now brought down to 3 years and up to 10 years if the income escaping assessment is over 50 lakh rupees in 1 year. So this is again 3 years is a good time limit for most assessees and very welcome. You don't really have to worry about older assessments being reopened. As you know, there are tax audits required for businesses with turnovers of less than 5 crores, provided the cash turnover and cash expenses were not more than 5% of the total turnover. This limit is now increased to 10 crores with the same conditions of 5% of cash turnover and cash expenses. So this is a relief, but a promotion to digitization. Government has brought in this important provision which makes it impossible for businesses to claim an expense as deduction which is towards deposits of employees' contribution or towards PF and ESI. So if a business delays the contribution of the employees to PF and ESI, then the amount will not be allowed as a deduction to the business. For small and medium businesses who have income up to 50 lakhs and disputes of tax of 10 lakhs or less can opt for a new dispute resolution board for small and medium businesses. How this will work is not yet clear, but they seem to be offering an easy dispute resolution for small businesses. This is an important change that the government is promoting. All these years, in the last 2-3 years, faceless tax proceedings have been brought in, which means if you file a tax return, your tax returns will not be assessed by tax officers whom you will see physically. It will all be digital. You will not know who is doing the assessment and who is actually dealing with you. This is now being taken up to the tribunal level, where tribunal appeals will also be faceless. And it's an important change towards digitization. The time limits that the government, that the tax officers had for completing assessments has been reduced to 9 months from 1 year that was there. Likewise, the time limits for belated and revised returns is also reduced. You got to file your returns well within this time limit. So that, ladies and gentlemen, is all I had to say. The changes are not big from a tax point of view. There were a few other changes that were made, but may not be of interest to you, so I'm not sharing them. But I'll be happy to answer any questions that you may have. Thank you very much. And over to Himanshu. Himanshu, yours, please.
Thank you, Ajay. Am I audible? I hope I am.
Yes, yes.
Yeah, you're audible.
Yeah, okay. So thank you for bringing me here. I'm not a tax expert, not for indirect taxes, but for direct taxes. Uh, so what I'm going to talk about is generally the budget in itself and what it means for the economy. And I think let me begin by pointing out that we are in a very, very critical juncture. This is something which is a pandemic year where most of the economies, right from developed economies to developing economies, have been going through some kind of a crisis, some kind of a economic decline, and there are problems of revenues and problems of, and therefore this budget, in a sense, is coming from that perspective. Even in the case of India, I mean, we have at least the projected decline in GDP growth is roughly around 7.78%, which to my mind is an underestimate simply because we are mainly looking at the corporate sector data. We are not looking at, we don't have the data on the informal sector or the unorganized sector, which has been hit much more. And therefore, so if you really take a guess in that sense, the real decline will be much more than what is being pointed out at 7.78%. But this is also in a context where the economy was anyway slowing down. I mean, it was something which was in a slowdown path for the last 2 years. And if you remember correctly, in September 2019, well before the pandemic hit the country, the finance minister had taken various steps to revive the economy, taking it out of the slowdown. So the recovery process was already underway at that point of time. In September, she announced the corporate tax waiver. Then again, various schemes were announced later in the next 2 months or 3 months. So that's the kind of a context that we have to think about it. But it's also a very good opportunity in the sense you don't get this kind of a opportunity. And in fact, in most crises, at least in Indian case, the crisis has generally been a kind of a godsend in the sense finance ministers have used this kind of opportunity to do new things, and not just new things in terms of the nitty-gritties and some patch up here, some patch up here, and some kind of small changes here and there. And that is true for the 1991 crisis. That is true for the all other crises that you can think about. And this was exactly the time. I mean, this was something which was a time where the budget was required to move beyond looking at this particular year and looking at only in the terms of recovery in this pandemic, but really to set out at the back to what we were growing earlier. We were talking about something like a 7 to 8%. And if you remember very correctly, I mean, at some point of time between 2007, 8 and earlier, we were talking about the word which you don't hear now is the double-digit growth. I mean, forget that. But even the trend growth that we are talking about is roughly around 6.5 to 7%, which is what we are expected to get around in 25, 26. But it's also a time where nobody was expecting you to follow the fiscal roadmap. So nobody was expecting that you are going to stand up in the parliament and say that the fiscal deficit is going to be 3% or we are going to follow the FRPM Act. So the kind of leeway that was available to you, the kind of an opportunity which was there for you was quite huge in the sense, and it's something which was for easy picking. It was something which you could have taken the opportunity to not just take the economy out of the crisis which is currently in, but also to provide a long-term, at least for the next 3-4 years, path. But remember, I think it's something which is very important because you might be very much excited that we are going to have 11% growth next year, or even higher or less than that. But that's something coming at a base which is very, very low. So effectively, you are not looking at, so even if you look at, say, for example, go up to say 23, 24 and look at what is happening, then you are still looking at a net 10% loss of GDP. And so even if you come back to, say, for example, 6.5 rate of growth in 22, 23 and 23, 24. So it's that kind of loss, which is very difficult to recover. So you need to really step up, and you need to have policies, and you need to have a kind of a roadmap which goes beyond this particular year. So for me, the idea of looking at the budget was not just looking at the numbers in particular as to what is happening this year, what is happening next year, what is the various things, but also I was looking at some new ways coming into doing things. And that was something which obviously was not so much there. At least it was not something which was very much obvious looking at the budget documents or in terms of the budget speech. The second, I think, is something which again is very important, is, and this is something which I must credit Nirmala Sitharaman to have taken the courage to point out to in the last budget itself, where she said that, okay, there have been off-budget elements in the budget, and these off-budget elements have been used by the predecessors. Her predecessors were using it quite liberally. And the result of that, we had the FCI started with a debt of 3,75,000 crores, and various other off-budget elements were used to buttress those numbers. So recognition of that was a very important fact of it. But that recognition also meant that you do something about it, and you make sure that at least that kind of a number crunching is not based on faulty assessments, or at least not based on assumptions which are unlikely to materialize. And I think that's where the whole assumption of excise taxes or direct taxes, or even in terms of direct taxes, or for example, the disinvestment target. For example, when you had 210,000 crore as a disinvestment target last year in an economy which was slowing down, where everybody knew that you're not going to get more than that. I mean, the economic surveys pointed out roughly around 50,000 crores of disinvestment receipt, and actually the budget numbers suggest something like 30,000 crores. So you can't have a budget which is built on assumptions which are unlikely to materialize. At least the past experience would suggest that this is the likely path to going to be. And you're not going to have this kind of a windfall gain even this particular year. So one has to be very realistic. So given the constraints that is there, that is available, you will have to choose as to what you can do, what you cannot do. And I think the third point that I wanted to bring out in that sense was that the whole sanctity of the budget process. I mean, a few days back, the Prime Minister was on record saying that a lot of mini budgets have been presented. And that's true. I mean, we're now having in a situation where you probably, Manthan, would have to organize these discussions every 3 months or 4 months. And that has become almost like a routine, where not just changes in the expenditure patterns, but also taxation proposals are being brought in the middle of the session, middle of the year, and outside the parliament, in a sense where there is not much of a discussion in the parliament on most of these issues, and they are retrospectively approved. So in a sense, it also kind of breaks the sanctity of the entire process. And this process of budget making, which is very crucial because it gives some kind of certainty as to what is going to happen for the next 1 year till the next budget. So that's something which is, again, I would say that this is where one has to be very cautious and use it as a maintain the sanctity of the parliament, and that budget numbers have to be followed without much tinkering happening in the middle of the year. And that's something which has been happening for the last 3 years, definitely. And it's likely to happen again in the middle of the year at some point of time. So if you're looking at the budget from that perspective, and if you're looking at the context, which is what I pointed out, that a sharp slowdown, which is where the growth rate without the pandemic was 4%. From 4.2% earlier, it was revised downwards to 4% in the January estimate. So we were already down to 4%, and then the pandemic leading to a decline. So we were in a situation. You needed bold ideas, and the bold ideas were not in terms of generally expenditure pattern, but also in terms of revenue generation, as to where do you get the, where do you mobilize revenues. And there's some easy pickings in a sense which are available, which is to increase enforcement and you go after people, or for example, but there are also ways, smarter ways of generating those resources. And those smarter ways of generating resources, a number of offers are already there. People have made those suggestions. And I'm not talking about only, say, for example, bringing back wealth tax and those kind of things. But certainly a good amount of changes in the direct taxes and indirect taxes could have netted you not a very big increase, but at least made the whole revenue projections much more reliable, much more credible, and much more trustworthy. And I think the trust part is very, very important in this. And I'll come back to it at some point of time. Secondly, also about the indirect taxes, where I think a lot of things are working on whims and fancies, where there is not much of a thinking. For example, this whole imported duties, inverted duty structure, or for example, the import duties that are being raised suddenly in terms of being a protectionist regime, where at least one would like to, I mean, because there is, most of the countries are becoming protectionist, so you would expect India also to become protectionist. But there has to be a reason, there has to be a logic, there has to be a studied, a good kind of analysis as to which are the items where you need to have a duty structure, which are the items which are not going to have duty structures. As of now, I mean, most of the time, even the ministry officials, I mean, whether in the Commerce Ministry or in the Finance Ministry, are clueless. I mean, which is why a certain item is having an import duty or increased or not being increased or decreased, and what is the revenue implication of that? What is the implication of that in terms of the local competitiveness, and what is the revenue implications, or in terms of generally the competitiveness of our industry vis-a-vis the export industries. So again, these things need to be properly analyzed rather than simply somebody sitting beside me, okay, let's do raise import duty on this one and reduce import duty on this one. So we don't have that kind of studies, and those studies are required at this point of time. So that, I think, is something which is a general kind of a comment, which has to be kept in mind. And I think when analyzing the budget, one has to look at the budget not just as a government's statement of account, but it is a fiscal response to a particular situation. And it's something which is a fiscal response, which is in tune with a monetary response, which has been followed by the Reserve Bank of India. I mean, this kind of a combination of this kind of a coordination is much more required when you are in a crisis. When you're not in a crisis, when you're not in a situation where you are dealing with a situation where economy is sliding down, or there is a problem of the economy bouncing back, and you are basically looking for all sorts of alphabets from A to Z as to whether it is a V-shaped recovery or a K-shaped recovery or it's a U-shaped recovery. You need to have a better coordination between what is the financial sector doing and what is the fiscal sector doing. I think that coordination is again very, very important, because if you're talking about a 9.8% fiscal deficit, it has implications on financial market. It has implications on your borrowing requirements, and it has implications because you are basically saying that this fiscal deficit is not going to go down next year to 3%. It is going to be 6.8% next year. And it is likely to remain for the next 2 to 3 years. So that will have an implication as to how the private sector is generating resources, how the government is going to generate resources, and what kind of a policy structure will the Reserve Bank of India follow, or for example, the banks will follow, the financial sector will follow. Given this fact that we already have a problem of NPAs, and we have a problem of, we are talking about development financial institutions, we are talking about bad banks, and we are talking about various other issues. NBFCs not working, not responding to the stimulus. So it is in that sense that some of the questions that needed to be answered, that needed to be spoken. I mean, this was not something which was a press conference which was done in the middle of the year. This was something which was an annual financial statement, where the finance minister was expected to come out and at least come clear on many of these statements, and at least make a point as to what is going to be the roadmap that we're following, what is going to happen next year, in which direction are we going to take the economy, not just the big slogans of Atmanirbhar Bharat and all sorts of things, which are again need to be broken down into what we are looking at. So 3 things, I think, again, now coming back to the numbers as to what exactly we are looking at in the budget. If you look at it closely, the total budget is roughly 34 lakh crores, the revised estimates that we have. It is higher than the 30 lakh crores that you had in the budget estimates, which were presented last year. But a lot of this increase is basically the amount of money that was paid to the FCI, which was again created by the jugglery that was created by earlier finance ministers. So you had an FCI with a debt of 373 lakh crores, and you were trying to pay up a little bit of that because that money was coming from the NSSF, the National Small Saving Fund, and you needed to do that. So that's something which is going up into it. And then again, there is money that is going for the fertilizer subsidy, unpaid bills, and various other things. So in reality, if you exclude all of these extra elements that went into it, and you also include some of the extra element that went into, say, for example, the DBT payments of 33,000 crores that went to as part of the COVID relief and all the other things, then you would actually realize that there is actually a decline in all other expenditures. And if you compare it with the budget estimates of this year, so last year it was, the revised estimate suggests 34 lakh 50,000 crores or something like that. And the budget estimates of this year is 34 lakh 83 or 85, something. So that's really not of an increase. We are not talking about an increase in expenditure. And if you simply take an average inflation of around 6%, which is the inflation that we've faced so far in this financial year, then it is not even covering for inflation. So again, I think this was the time when nobody would have asked you questions. Nobody would have asked you as to why are you raising expenditure, and you had the freedom to increase expenditure, to go and take into that kind of situation where this would have yielded you a return or a dividend, not just for this particular year, but a longer term process. So again, this was, I would say, as a missed opportunity. And you might actually give up the numbers and say 9.8% is the fiscal deficit. But it's not just a matter of quantity. It's not just a question of how much is the deficit. The question is, where are you spending? What is the multiplier impact of that spending? Where are you going to the biggest return of that investment? I mean, especially when the money is scarce and you are struggling to use that money, you will have to see where you are actually going to spend that money. And again, that would have required a much more deeper analysis into that. And I will point out to two or three important pointers to that. One is that, and I'm not saying that simply because I studied agriculture, I studied rural areas much more closely, but I think this is something now that even the harshest, the critiques of people who are supposedly anti-fiscal deficit in that sense, or even the biggest supporters of this, let me put it like that, even most of the mainstream economists, if you ask them, and they will say that we are going through a problem of demand. We are going through a problem where there is an excess capacity in the industrial sector. There is, our capacity utilization went down below 70% at some point in time. There is a problem of demand, which is basically making the manufacturing sector cut down on the production, cut down on expenditure, cut down on investment. And investment has come down very dramatically. You will, because if your inventory is building up and if there is no demand for your commodities, you are likely to cut down on that. So you needed to shore up demand. You needed to raise demand. You needed to increase demand. And the best way to increase demand is to inject money at the bottom end of the distribution, because that's where the demand is fully localized. It doesn't basically leak out, which is what we say, that if the demand is basically generated among the top tier of the income distribution, and because their import dependence of their consumption pattern is much higher, whereas at the bottom end of the distribution, the import the share is almost negligible. And therefore, the multiplier impact of that and the kind of commodities they consume are always much more labor intensive. Then even the labor problem or the jobs problem, which is again a burning problem, is taken care of. So that's something which is a common kind of you don't need to be read Keynes and Kallisky to understand that this is a very commonsensical understanding of how demand is generated in the economy. You needed to do that, and you needed to do that quite aggressively. I mean, you don't need to wait for, this whole idea that we are waiting for it and we are timing the execution and we are doing all that. The only problem with this kind of strategy is that, unless you are some kind of an astrologer or you are such a good economist, that you know that what exactly is the time, you will not be able to do that. It's essentially, you need to do it when the patient is actually in the ICU. You need to stabilize the patient at that point of time, rather than say that let's wait for some more time before we do that. And I think this is a trade-off which most countries are facing. And most countries have taken that decision to do it at this point of time without waiting for it. I'm sure that even the richest countries were not foolish enough to say that, okay, we will also wait for and then see what comes out of it. So again, I think this was something which was an opportunity where you could have ramped up expenditure. You could have basically increased the expenditure in all those areas, and that would have led to demand coming up. The fact, in a sense, one has to go into this whole recovery exercise itself, because when you're talking about a K-shaped recovery, and this is what is basically what we talked about, you are basically saying that the corporate sector or the sector which is relatively organized sector is doing much better off. But it's also, there is something which is not a divergence, it's something which is linked. If it is coming at the cost of wages, or it's coming at the cost of job losses, it's coming because the wage cost is coming down, then it has completely different implications. And I think that's something which is the divergence is not good for the long-term recovery of the economy. It might be very good in the short run. The stock market will do very well. Your profits will grow up. The profits are growing at a very high rate. And you will see the corporate sector data reflecting the economy's very well functioning. But it is a recipe for disaster in the 4 to 5 year long run, medium run, and definitely in the long run. That's something which is generally the case. So if you are not dealing with this kind of a situation, then the best strategy would have been to expand on that. You look at say for example, and these are minor things. You don't have to spend too much of money in that sense. Say for example, NREG. I guess taking the example of NREG because everybody is aware of it. We spent 72,000, roughly 72,000. This is actual expenditure. This is the actual expenditure in 2019-20. In this particular budget, we have budgeted 73,000 crores. Just last year, the wages went up by 11%. If you remember the announcement, the very first announcement that came out on 24th of March, right after the pandemic, the finance minister was very boisterously announced that the NREG wages have been increased. If you have nominal wages increasing by 11% in just this particular year, and your actual budgeted estimate is low, almost 1.5 or 1.8% increase compared to 2019-20, then there is not much of an increase. So you need to do that. And that's also something which creates infrastructure. That is something which is going to absorb employment in the rural areas. You needed to invest more in the agricultural sector. You needed to put in more money in the agricultural sector. The PM Kisan, I remember the first speech that the Prime Minister gave in May 2019 after winning the election was that the PM Kisan budget has been expanded to 93,000 crores. I mean, it has now come down to 65,000 crores in this one. I'm saying these are not something which is, but any injection of money in the rural economy would have allowed the demand to be at least come back to the level that it is there. If it is not working, then either way you are going to face a problem. I mean, if you're not going to directly face a problem, which is what the automobile sector or others are facing, you will face a problem which the Delhi is facing with the hundreds of thousands of farmers at the border, I mean, demanding all sorts of MSP guarantee, which I don't agree with, and various other things. But again, so this is something which is where you need to make your priorities very, very clear. Which is the sector we are going to target, which is where we are going to spend. And I think at this point of time, this was the right time for you to do that, to make the economy recover. This is the right time for you to increase demand, to also take care of problem of the slowdown that was building on for the last. The economy was basically suffering from that slowdown for the last 2 years. The third, again, is something where we needed a good amount of expenditure on, say, for example, health. And because this is something the pandemic is basically exposed. It's basically showed that the state of your health infrastructure. Again, a lofty number, you break down the numbers, you look at the next year, you realize that actually the increase is not much there. I mean, it's like you have increases, finance commission devolutions, 15 finance commission devolutions have been added in the budget. And all sorts of other items have been included in the budget to show that you are spending on health. Again, if you know that this is something which can impair your economy, any smart person would start building up the reserves for that. I mean, even a household starts building up. One shock in the household for health, and the family starts preparing for the next one. And you don't start preparing for it from now onwards, then obviously you are basically missing the boat, and you are going to have the crisis again in the next period of time. So these are the sectors which needed that kind of investment, and I think that's the agriculture and the rural part, which I think is something which is missing. Then comes the issue of the manufacturing sector, the small business sector, and again, so far the strategy that we have followed, and the entire the small and medium enterprises, the SME strategy that the government has followed, is to basically increase in credit availability to them. I mean, it is. So there are two parts to it. I mean, if you look at whether what was announced during the pandemic or what has been announced here also, if you look at the actual allocation in terms of amount of money that the government is committing to creating some kind of infrastructure or providing some kind of support to small and medium enterprises, you see that amount of that money is not there. But any amount of credit increase is not the way. When you see, it is at a time where most of the small and medium enterprises have actually reached a situation where they're on the verge of default. They don't even have the credit availability for working capital. Forget about investment and even the working capital. Banks are reluctant to lend. Banks are becoming more and more cagey, as NPs is becoming a problem. You need to, at this point of time, create special purpose vehicle or create a mechanism through which you can directly support these small and medium enterprises. Not that DFI is fine. I mean, that's something which is going to take care of the big ticket investment. It's not something which is going to take care of majority of the small and medium enterprises. But you don't see that. I mean, if you look at the details of the ministry's budget, or look at the details which is there in the details of it, you don't see that kind of numbers. You don't those numbers don't inspire. So you can talk about Atmanirbhar Bharat, you can talk about various things, but Atmanirbhar Bharat is not going to happen by import duties. It's not going to happen simply by slogans. It needs the kind of hand holding. It needs the kind of really the walking along with those ones to create that infrastructure. That is something which is not there, neither in terms of policy nor in terms of the allocation or expenditure in that sense. That is not happening. And if that is not happening, then it is not something which is going to happen on its own. So we needed that. And that is something which is crucial for you if you want to deal with the employment problem, if you want to deal with the problem, for example, of jobs and various other things, which are a niggling problem, structural issue that we need to at some point of time tackle on. We can't keep on ignoring it, and maybe we just can't imagine that at some point of time it will be taken care of. So that's something we don't see that blueprint coming out very, very clearly. I think also for the corporate sector and the financial sector, lots of these things are, and I must say that there are two parts of the whole budget exercise. One is the governance structure part of it, and I think a lot of them do not have to come to the budget in a sense, and whatever you are going to do with them. These are outside the budget, and these are regular processes. These are processes which are being worked out time and again. But at this point of time, you need to really work out as to why is it that the credit offtake is low. What is it that is stumbling block as far as investment offtake is concerned? And you realize that the structure of the corporate, the whole corporate structure, if you look at it, I mean, it is basically being concentrated in certain sectors. And in those sectors, you need to basically look at it whether the competitiveness is going to survive or not. Or it is something which is where, I mean, I think and I'm referring to crony capitalism, I'm referring to a lot of the issues which are people talking about, I mean, various other things. So if you don't broad basis, you don't, and there is a difference between a free market policy and a pro-business policy. Pro-market and pro-business policies are completely different meaning. So if you're following a pro-business policy, that is not about pro-market policy, which is allowing more competition and allowing more players to participate in that. So you see that a lot of the money that is there, a lot of the money that is coming is basically very much concentrated in certain sectors, in certain industrial housing. Again, that broad basing is very important for the organic growth of and you need to provide that impetus. You need to provide that kind of a support structure to the corporate sector. And again, that is something which is missing from the budget. I'll quickly, I've already taken so much time, so let me just quickly wind up and then we'll have more discussion on this. But I think the idea of the budget or this particular budget's objective was very different. And I think if you look at, say, for example, on 3 or 4 axes on which you could have investment or exports, or for example, on building up what we call as the Atmanirbhar Bharat, or with the small and medium enterprises as the backbone of the economy's recovery for a longer period of time, or for example, the rural and the agrarian economy, which is where your demand is going to come from, at least the domestic demand is going to come from. Remember, you are the biggest market. I mean, you have the numbers, you have the people who are going to be your strength. Then I think in all those sectors, you see some kind of bits and pieces, which are again in silos. I mean, there is not much of a connection between any of them. Or even when in those silos that you're looking at it, the policies do not have the connection. Either there is no backing in terms of expenditure that is coming out of it, or there is no policy coherence in terms of designing as to what exactly the government wants to do. I mean, you might allocate a lot of money, but if you don't have a policy guidance as to where the money has to be channelized, then you don't have the outcome that you want to get. And you need to have that kind of a structure. You need to have that kind of an understanding to have a long-term impact of the money that you're going to spend. Much more when the money is scarce, much more when the economy is slowing down, much more when there is a pandemic threatening your economy from economic revival. And I think if you miss this, I mean, you don't use this opportunity of using the crisis as an opportunity to break from the repetitiveness, then I think you are missing the boat, not just this time, but again for the next 3-4 years coming down the line. And I think we did miss this particular time. Let me stop here and then I'll come back.
Thank you, Himanshu. I mean, we could have had a more comprehensive view of what our state of finances are and what the budget is all about. I would like to just add a few factoids, if you may say so. First, I thought this is, I'm sure the finance minister will not like this per se, but I think this is a very secular budget. That in the sense that it just picks up from where it was and doesn't give a grand vision of where it should be. It's just connecting the dots. There's nothing spectacular, no big bang. I would just go back to what one of the questions which the economic survey says about lives versus livelihood, and takes credit of the fact that they save both lives and livelihood. And I would want you to answer this question as to, has it really been by a conscious strategy, or because if you notice that the budget hardly mentions anything about the migrant crisis we had during the pandemic. It just mentions, the finance minister mentioned one paragraph, which says that to further extend our efforts towards unorganized labor, migrant laborers particularly, I propose to launch a portal that will collect relevant information on building construction workers, among others. That is the initiative which we have thought of for responding to this crisis. And we don't talk about the suffering which they went through and what are the structural faults which made it happen. First, I want your reaction on this.
Even this was something which was actually suggested by the Supreme Court. I mean, when the whole case was going on in the Supreme Court, and the Supreme Court said that, do you have any record of how many migrant laborers are there? And that is what, when the central government spur of movement or whatever you call it, said that we are building the database. And then they started doing it. I mean, otherwise there was nothing which was a database of migrant laborers or something like that. But again, this is something which is, you see, I mean, you have created, I mean, the solution, all of the solutions that are being provided are the kind of a digital. I mean, you do it in a digital way, and then the problems are, I mean, the migrants are not going to eat your data. I mean, migrants had the access to buy the train tickets from the IRCTC website at this point of time. IRCTC website did not collapse because of COVID, but you didn't have trains running. I mean, what would you do logging onto the IRCTC website? I mean, you can't simply fly by internet. I mean, you need to have that. And I think this whole thing of recording or making sure that you have your data are entered in is the same thing that is happening with various other initiatives, the One Nation, One Ration thing. I mean, if you want to talk about the One Nation, One Ration thing, I mean, if you go and talk to the people on the ground, you find hundreds of problems. I mean, very common problems which the government, the ministry people here have not thought about. I mean, for example, I mean, I'll give you a very simple example of it. I mean, I'm from Tamil Nadu, and my ration card is mapped, and I become One Nation, One Ration. Now, obviously, I get free everything. That's my ration entitlement in Tamil Nadu, and I go to some state where I have to pay. Now, that state will not give me for free. I mean, but I'm supposed to get it for free. So that interoperability is not just a technical issue. It is something where the governments will have to come together and provide the different things. But this whole idea that you connect everybody, One Nation, One Ration card, and implement it, and all the problems will be solved, is, I think, is at the heart of it. And it's something which is in the mind, that you create a website, and probably if you create a website, the economy also will start growing. Is that kind of a solution that people are dealing with? That's it. I mean, but I think there was a Supreme Court which basically prodded them to ask them as to what were you doing? Do you have any record of that? That is when the government, it didn't come even to the government.
Yeah. There's another aspect to this I would refer to is I've collected some data from the website on the number of man days they spent under the Manrega scheme. And in the 5 states of Bihar, UP, Jharkhand, Madhya Pradesh, and Rajasthan. And the data collected says that they have spent 6,000, 5,600 crores, etc. But what I find peculiar is when we divide the amount of money which they spent divided by the man days, the average price they pay in each state is a huge variation. Bihar, the per man day you pay 1,500. In UP you pay only 830. In Madhya Pradesh you pay 880. In Jharkhand you pay 1,650. In Rajasthan you pay 540. So I'm assuming that in all these places the average number of average wage paid won't have such a high variance. So is it possible that data can be trusted?
No, there is not much of a variation as far as average wages are concerned. The only variation that happens is because the total expenditure also includes material component. The NREGA has 60% wages and 40%, but it is relaxed in many cases. And in many of the states, the problem is also unpaid dues, which they are paying right now because they got the money. And in fact, it's also something which you go and look at the website, you realize that most of the states actually ran out of the money. And they basically had difficulty in continuing with the program because the demand was such, and the demand is still continuing. And I think what the NREGA did was to provide that space, provide that at least the content, the discontent which was there among the poor migrant worker who walked for 1,000 kilometers or 200 kilometers or 500 kilometers, at least something to work on. But that demand is still there. And I think the government needed to, at this point of time, to continue it, not like cut it down at this point of time for at least 1 year, at least minimum 1 year to make sure that the economy is back to stabilizing at this point of time.
It's ironic that Manrega was a much vilified scheme in the beginning of this new government, and that has come to the rescue of the government at the time of pandemic.
Yeah, the Prime Minister wanted to build a monument of failure.
Yes. There's another initiative which I think it's a much debated and discussed initiative on the creation of a bad bank. They were the non-performing and stressed assets are transferred to a bank. And there's a separate asset reconstruction company proposed, and they will take over all this bad debt. And they will now set aside the process of transferring these assets to possible bidders. I think there's a divided opinion on whether a bad bank should be created or not. But I have only one comment to make, and I want your reaction to it. A bank is not just about borrowing and lending. It's also about creating human resources who are trained to borrow and lend. So I think that integral part of bank is the trained human personnel who are trained to recover assets. So now, if you remove this, then you're removing history, you're removing practices, you're removing protocols, and I don't think that's good for this bank. I want your comment on that.
I think sometimes some of the ideas which appear very good in terms of theory, that you do something which is, when you start coming and start implementing it, then you realize that the problem is much more than, I mean, obviously the issue that we talked about in terms of human resources or the bank's lending practices and what the history that everything we talked about. Bad banks are not a solution to the problem that we are having. It's a solution to the symptom at this point of time. Or even if the solution as a symptom itself, it's not something which is a usable, I mean, it's something which can be used at this point of time. And that is why there has been a reluctance, and rightly so. I mean, this is a reluctance on bad banks, which has been being talked about for quite some time now, more than 5 years that this whole thing has been talked about. I don't see that bad bank is actually going to solve the problem. I mean, on paper, it appears very seamless. You create the bad bank, all the bad assets, or the asset. I mean, in fact, the economic survey is also talking about the fresh asset quality review, the fresh AQR be done by, which again the banks will be very, very reluctant because they don't want to do this once again. But you do that, and then you park all of that in that sense, and then there will be somebody who is going to buy that. But somebody will have to take that haircut. Somebody will have to manage that. It's not something which is going to happen without somebody taking that haircut. But it depends on how are you going to do that. But if you do that also, the bad bank is not a permanent solution. It is not in perpetuity. It's not something which is continuing. You can't simply have a bad bank and have the same practices which allow this kind of a system to emerge. So you need to have again a solution as to a solution which is much more stable. And I think on those issues, our lending practices, our the way the whole lending, borrowing is happening, or the banks are working, that needs to be reviewed. We need more clarity on those ones. In fact, the DFI is more in that direction. The whole the development finance institutions is more in that sense. But it's a full circle. We had the DFIs, and the DFIs were converted into banks, and then again banks we are going back to the DFIs. So we are learning by, I mean, this is something which many of us were arguing at that point of time, that a developing economy at that point of time, where assessing the quality of infrastructure projects is something, or for example, long-term lending for infrastructure projects requires development financial institutions. We ever laughed at, saying that the banks are the best and allow the banks to be privatized, and there is no need for DFI, they are the red tape and all sorts of things. And again, you see something which is, again, people are creating the DFIs, saying that we need that for long-term infrastructure funding. So I think we are going in a direction where the only way we learn is by committing the mistake. And so I think that's the only way to learn.
Even if you had wanted a DFI, I think government should have examined the possibility of selling it to the private sector. There are enough interests in the globe where there are enough capital available for a long-term development financial institution. And I don't know why government should again enter into banking, into development financial institution, in this market at least. The third question I have is this thing on privatizing. One of the proposals is to privatize 2 public sector banks and 1 general insurance company during this year. And do you think that this is the way to go for these public sector banks? And was there any other alternative for them?
Again, I think privatization is not a solution. I mean, I still have been saying that whatever problems that we're talking about banks, these are their problems. I mean, if you have a problem with the Punjab National Bank, you also have a problem with the ICICI Bank. You also have a problem with the Yes Bank. You also have a problem with the Global Bank. And so this is something which is, I mean, it's a very easy to say that just because one bank has a problem, then you malign the entire sector. I think what the requirement is to allow greater freedom to the public sector banks and give them the kind of a better the freedom to decide whatever, rather than being dictated by the Department of Banking reforms in the Ministry of Finance. They need the greater freedom, and they need to do that. But as long as we need public sector banks for whatever purpose, for whether it is social banking or, for example, government's objectives of Jandan Yojana or whatever financial inclusion that you want to do, which I don't think any private bank is willing to go and open up in the remote areas and do that. You need to have that. You need to have that. Then you have to give them the freedom to do that. You can't have you can't create a bad bank out of the public sector bank and then blame the public sector bank that you are bad. So I think that's the solution which is not go for. And they did a try with the merging with the banks, and then merger of the various banks have been already been done. You can do that with selling the banks is not going to create, or making a bank private is not going to be the solution. And if that was the case, then the entire private banking sector and financial sector in the United States would not have gone into a financial crisis. There was no public sector bank that went into a financial crisis. It was a private sector agency, it was a private trading agencies. That's why we had the financial crisis.
I now shift to what the finance minister mentioned on MSP and the kind of support this government has given, especially in the year 2021. And the amount paid to farmers in 2013-14 for wheat was 33,000 crores, whereas in 2021 it is 75,000 crores. It's much bigger in paddy. It moved from the 63,000 crores to almost 141,000 crores. This is the kind of support which the central government has given to the farmers over a period of last 5 years. But we still say that there's an agricultural crisis.
This is, first of all, this is not a support. Secondly, this is not way of presenting the data. You don't present data of 2013-14 and then present data from 19-20. You should have presented data of 2014-15, say 15-16, 16-17, and 17-18 also. And you will get a completely different kind of a picture. Because that was the time that government was not procuring. The government started procuring very much because 2019 election was coming, and then you know it that before elections government's going to do. But remember, government is not giving the money to the farmers. They're purchasing something from the farmers. You are getting something in return. In accounting book, it is balanced. There is no single expenditure. If the same amount of grain you go and sell it in the open market, or for example you export it, there's zero expenditure. You might actually make a profit out of that. So you are not supporting the farmers. If you buy something from consumers and then sell it somewhere else, then that is not, it's a business transaction. And a business transaction is very different from supporting the farmers. But I think it's also the question that must be asked, that if your requirement of food grain procurement every year is close to 45 to 50 million tons, then why are you procuring 100 million tons? Why is it that your godowns are full? You have more grains in the godowns at this point of time than what is necessary at this point of time. On 1st of January, the buffer stock is supposed to be 20 million tons. We have a total amount that is roughly like say 85, 90 million tons. But we are paying cost for that. Government is actually incurring for carrying that excess capacity of stocks, which is something which is unnecessary. You are doing it simply because the farmers are on strike. Farmers are on the street. But tomorrow when the farmers go back, you are not going to do that. I mean, that's something which is the case. There is a huge variation. Madhya Pradesh elections were there. You procured 13 million tons. When in Bihar, the same Rabi procurement was only 50,000 tons. So there is a huge variation that is there. I don't think that MSP politics should be seen as, or MSP purchase from the government should not be seen as some kind of a support to the farmers. In that way, the sugar companies, sugar mills, when they buy sugar of 1 lakh crore rupees from sugarcane. They buy sugarcane from them. So tomorrow, the sugar mills come and say that we have supported farmers by giving them 1 lakh crore rupees. That will look like absurd to you, but simply because they are buying it because they are using it. I mean, that's not something which is you are giving free to the farmers. But the important question is that what is happening to the entire policy regime, what is happening to the MSP regime, what is the kind of support structure, and there the numbers are very clear. I'll tell you, the PM Kisan I mentioned to you, the PM Kisan, the numbers have come down, and the amount that the government promised and what they're actually delivering. Even in the budget now, they're talking about 65,000 crores. Remember, February 2019, the huge hangama was 75,000 crores is what we're giving. 19, they said 95,000 crores we are giving. Today they're giving it. On insurance interest subsidy for small loans to agriculture, the amount allocated is lower than what was there. For various other agricultural schemes, the amount is much lower. So you are not spending there. But MSP is not a support. But there is also a simple arithmetic. When you're buying in 2013, the MSP was different. In 2019-20, the MSP has gone up. So simply because of that, the prices will be high and the value will be higher.
Yeah.
So, I mean, it's a simple inflation. I mean, you're not talking about in real terms. You're not deflating it. But prices have gone up and paddy prices have gone up. And paddy prices have gone up. And say, for example, wheat MSP at that point of time was roughly around 1300-1400. Today, the wheat MSP is close to 2000, 1900 or something like that. So obviously the value will go up simply because the MSP has gone up.
No, but
you can't say that this is my support to the farmers.
But the argument would be that we give 1,300 rupees, now we are giving 2,000 rupees, so the farmer has more money in his hands.
Well, that is inflation. I mean, if you compare it with inflation, I mean, your wages have gone up. I mean, public sector salaries, I mean, look, I mean, what has happened to the wages of the bureaucrats and wages of the MPs and MLAs, and Arun Jaitley introduced particularly a bill where the wages are inflation indexed. So that's something which is there. I mean, you expect the farmers that after 6 years, when inflation on an average has been 4.5%, to still sell their produce at 1,300 rupees. That's something which is unfair, I would say.
There's one more thing in the budget which has been prominently silent, if I can say so, is on the employment and unemployment numbers. I was just going through some data, and I will tell you something very interesting, that the number of employees in railways, 12,70,399, is the same figure for the past 3 years. Does it mean that railways have not employed a single person in the last 3 years? And even overall, government employment has gone up only by hardly about 5%. Now, I want to know what's going wrong here. And are they saying... Sorry?
There are two things which are happening. One is that there is an absolute decline in the number of workers. I mean, total workers that is being employed. And that is happening in almost all government departments. They were given a notification, and this is government circular which is there, that they were told that they have to cut down by 10% or something like that. That is the stuff that came during when Arun Jaitley was the finance minister itself. The second is a large part of the job is basically shifting from formal to informal, which is what we call as a contractualization. I'll give you an example of it. Like say in my universities, when we were students, or even some 15, 20 years back, I mean, all the support staff, right from peons to office attendants, section officers, and security staff, mess workers, all of them were permanent government employees. Today, almost everybody is contractual, right from your office support staff, everybody is contractual. Our university is slightly protected. If you go to Delhi University, even teachers are contractual. So 50% of the teachers in Delhi University are contractual. So they are basically the remaining contractual staff, at least in the lower level, they go through the contractor. So they are not employees of railways, but they are employees of the contractor. So railways employee number would show a number. So there is a both decline in quantity, but also the quality of employment. And this is something true, which is for most of the central government employment. For example, if you look at it, most of the state governments now have contractual teachers, contractual health workers, contractual office staff. I mean, except for contractual bureaucrats and contractual politicians, I think most of them have been contractualized.
I shift to another aspect on the allocation of states because of the revenue which is received by the central government and the recommendation of the 15th Finance Commission. I just want to, I mean, it's a very sensitive thing, but I just want to explore this myth that South and West are contributing and it is North and East which are drawing from these funds. The total allocation of the central government to Andhra, Telangana, Karnataka, Tamil Nadu, and Kerala put together is 15.77%. The total allocation to UP alone is 17.93%. So, and I've not added Maharashtra cleverly. But UP, Bihar, Madhya Pradesh, and Rajasthan take 40% of the resources, whereas these 5 states get only 15% of the resources. You think that some federal polity will be affected in the long run, or we need different bases for this allocation?
There are one thing which you missed out, obviously, is that in the long run, it's the central government which is basically taking more money than all of it together. With the number of cesses and surcharges that are coming in, I mean, including in this one particularly, I mean, the state share is going to go down. So you might be comparing, Bihar may be competing with Andhra, while somebody else is eating your chapati. The famous story of the monkey and the cats is going to play out. So I think this is happening. I mean, the share of the cesses and the surcharges have now gone up substantially. And if you take into account the total, including this one, as the total devolution to the states together, you remember the 14th Finance Commission started with 42% devolution to the states. Today, the number, by taking into account all the numbers, is less than 30%, because the central government has basically taken away, whereas you are fighting that whether Bihar is getting or UP is getting. So that's the point, which is a separate point. The second point is obviously.
Sorry.
The second point is obviously about the states. Remember, UP has 20% of the population of this country also. I mean, the 40% that you talked about these states, they together are 52% of the population of this country also. So in a sense, where three dimensions, three criteria that go into Finance Commission allocations. One is population, which is again 71 population, which is there. The second is the criteria of development indicators, because a lot of money goes into development. And the third one, which is again the distance from the median and various other indicators that they bring into in that sense. The richer states are likely to get, but the weightage that was given to these indicators, that weightage has now been reduced. It's now becoming actually much more equitable. I mean, unless this 15th Finance Commission, which is threatening to use the new population estimates, where the poorer states are likely to get benefit more because of which has not been as yet been worked out. But there is a demand from the poorer states that we have more population, and therefore per capita basis we should be getting more. So I think that is where the balance lies.
I have a last question before I shift to the Q&A of the I have one more fact here. We have about 885,000 companies in this country. And out of the tax-paying companies, the 1,800 companies contribute more than 70% of the corporation taxes. Now, for me, it is a signal of that K-shaped recovery we are talking about and rising inequality. That there's so much of concentration of income tax and wealth and profits in less than 2% of the total corporate world. I want your comment on this.
No, this is actually where I was talking about that the budget should not remain simply an economic exercise, but should actually be providing the framework as well as the support of making sure that we have a pyramid, proper pyramid. Right now, what we have is a pyramid, which is where what we call as the term that the word we use, the missing middle, in the sense you have a small minority at the top, but then the base is quite, I mean, almost 90-95% at the in between that is something which is there. So we need a policy where you allow the smaller ones to grow up to medium level and grow up to medium levels to become larger. Now, but that policy that we have here today, the policies that we have excessively focused towards the richer ones, which again is coming from a different understanding that we have to create that big behemoths. We have to create the Chaibols, which is the Korean strategy, which was that you create LG, Samsung, Daewoo, and those kind of ones, so that they're able to compete internationally. Whereas but then again, there the strategy was that they had a direct organic linkages with the bottom ones. Here we don't have that kind of, and the state will have to intervene. State will have to create that. We'll have to create that vehicle. We'll have to create that infrastructure. We'll have to create that mechanism through which the small ones grow and become part of the pyramid rather than being only at the base of the pyramid. We don't have that, and that's something which is the biggest reason why our manufacturing sector is not growing.
Thank you, Himanshu. You've answered many questions. I still think what was a wonderful opportunity for the finance minister to make bold statements. They have the majority, they can make bold departures, and they have a crisis in hand which could have been used as an opportunity. And somehow I think that they have missed those opportunities. Health and education are in rhetoric, but the fact is, if you see the numbers, they're getting lesser numbers than what they were. So I think that, once again, it's a case of missed opportunity, and it's a steady state economics and nothing big bang. Ajay, your questions. You're muted, Ajay.
Muted. Yeah.
This was a wonderful exposition, Himanshu. Thank you. Thank you and Thirumalai for this, for really giving us a very deep insight. There are many audience questions. We'll pick up a few and ask of you, and we'll take it from them, from there. Now, there is one question for Thirumalai. Whether the GST audit dispensation is for financial year 21-22 or is it for financial year 2021?
It is going forward.
Meaning?
21-22.
21-22. All right. Now, this another question that has been repeated by multiple speakers to Himanshu is this. What explains the stock market booming?
Very obvious. And this is something which has happened in demonetization. This is something which has happened after GST, and this is something which is happening now. Which is that the people who actually suffered, I mean, the sector which suffered, even in the case of demonetization, there was a shift from informal sector to the formal sector. The malls survived because they were already digital, they were taking money. The informal sector was the hard hit because they were the ones who were dealing with cash. Same is the case with GST, and same is the case in the pandemic. In the pandemic, in fact, what has happened is that the corporate sector has been much more resilient and has been protected than, say, for example, the informal enterprises or the unorganized enterprises, especially the ones who are there in the service sector. They don't have the cash, they don't have the staying power, and they suffered very quickly. And even that business was shifted to the corporate sector. The corporate sector managed to. But the other way the corporate sector benefited, and again, this is by breaking down if you go look at the data from the detailed data that we have, the corporate sector data that we have looked at, we realize that the increase in profit is basically on account of decline in costs. And the decline in cost has happened on two counts. One is the decline in the wage cost, which is roughly around 7% is the decline in the wage cost, including job losses and lower salaries that the corporate sector has paid. And the second is the cost of raw material, which again has gone down. And then the result of that has been the increase in profits. So in a sense, the profit growth has been. So the corporate sector has basically benefited out of this. And that is why I was saying that this is bad sign. I mean, this is something which is, the stock market boom is not going to create demand. It is not something which is, the corporate sector in any case was benefiting. I remember because of the 2019, the corporate tax break that was given on paper was 1,46,000 crores. It actually ended up as 2 lakh crores. So it's like the government, it exceeded the government estimates. So it's a huge amount of, and the expectation was that this is the money that we are giving for the corporate sector to come back and invest. What actually happened was that most of the corporate sector used that money to clear their debts and basically make use it as to clean their balance sheet and increase in profitability. So we do see that happening. Incidentally, that is also happening in some of the other countries where the stronger ones are more resilient and they are able to survive the pandemic or survive the crisis better than, say, for example, the bottom heap or the small and medium enterprises or the poorer sector.
There's a question here as to what is there for the poor to alleviate poverty in this budget. And I would add this to the what the economic survey runs a whole chapter on how higher growth is the direction for poverty elevation, and government should be investing in growth, and higher growth leads to lower debt, not the other way around.
I agree that poverty alleviation is not just, it doesn't happen only by state giving money to the poor. Growth is certainly but growth has to be qualified. Growth which is broad-based, growth which is basically benefiting the poor. And so there is what we call in literature the word pro-poor growth. In a sense, depends on who benefits from that growth. If workers' wages are growing in the same rate as, say, for example, the productivity in this industry, then the growth will have a larger impact on poverty. So again, growth is something which is there. It's something which has to be there. It's a precondition. It's something which is the necessary condition. It's not something which is you can ignore. State can help in two ways. One is by directly supporting the poor, but it's not something which is how you reduce poverty. No country has ever reduced poverty by simply government transferring money to them. But it can create enabling institutions. It can create enabling environment. And that creating enabling environment is investing in health, investing in education, investing in nutrition, investing in basic infrastructure, investing in basic credit availability for the small and medium enterprises to grow, or for example, linking them to the markets, or providing them skills, providing them training, all sorts of other things. So again, three factors which if we take it together, growth first, it has to be there. So you can't have a poverty elevation when growth is not happening. It's a rare condition. Some countries have done it, but it's again countries which have taken growth into a different direction. Secondly, states' role depends a lot on how much of it you can directly do. Some amount of direct support is very important, but a large part of the support is through creating human development infrastructure, by creating enabling institutions. For example, reservation, I would say, or for example, gender participation, allowing more women to participate in the economy, allowing people from disadvantaged groups to participate in the economy, is again something where they can create better, faster poverty reduction. The second question that you had was on inequalities.
Yes.
I forgot the word.
No, the second question was, do you think that the connection between higher debt, higher growth leads to lower debt?
Obviously, if this is something related to even fiscal deficit also, in the sense debt financed growth is something which depends. Again, it's a quality issue which we are always forgetting. There is not a linear relationship between. You borrow money and it depends. It's something which is what our parents will tell us, that you can borrow money and you can simply drink it up, or you can borrow money and invest. So it's not just the debt which is important, but it is the quality of debt and what purpose do you put that debt to. If you use the debt to use for revenue expenditure, entirely for revenue expenditure, that debt is not sustainable. But if you take debt which is used for capital expenditure and used for building capacity, then that debt is something which is, again, so there is not something which is, it's not a black and white, it's not something which is very easy to provide a solution. But companies do take debt, and various other people, households do take debt. It depends on what you do with that debt. So I wouldn't come to a that this is versus this leads to this causation. It's not so black and white. It depends on a lot of other things.
Ajay, there's a question for you. It says that the virtual e-assessment of income tax has been claimed to end the vast corruption plaguing the department. I never knew there was corruption in the department in the first place. What are the barriers that may hinder its adaptation? And do you think that these faceless assessments will, especially even in the tribunal, will change the way income tax is being dealt with? Ajay.
So the question that is asked is, are faceless proceedings practical and feasible, and especially whether an appeal which is faceless is not an inconvenience to the SSE. Now, there is no question that faceless assessments are a great thing to have. They cut down the chance of pollution, the quantum of pollution, the requirement for the taxpayer to face the tax officer, the frequency by which that happens, there's a whole lot of benefit to having faceless assessments. And now there are faceless appeals. That is the first level of appeal. And in this budget, they have proposed for faceless tribunal appeals. Now, I am not very sure that the tribunal appeals will work as well as assessments, because it's a very judicious function. And to do it faceless, to do video hearings occasionally but not regularly. When I understand it to be faceless, I mean that there won't be hearings, there'll be only submissions. And at the tribunal level, there is much more of persuasion that is required to be done, a lot of arguments that happen, which I don't see working in a very efficiently in a tribunal environment. What do you have to say, Thirumalai?
And I agree. There is, even at the hearings that we go through now, it is all right if it is a covered matter, where complex documents need not be seen. But where you have to show fact, because it's the highest fact-finding body, and where you have to show facts and rely on evidence, it becomes difficult because voluminous records have to be, and after a while, the e-hearing becomes less congenial for this sort of a approach. And perhaps in the ITAT, what I read was that they have said that selectively, if required, they may call for physical hearing, if I am not mistaken, in the current provision which they have made in this budget. If that is so, then there should be a process. It can't be arbitrary.
I also think that there's a value to advocacy. Advocating a cause is something lawyers are trained to do. I'm lawyers, chartered accountants. And that is more effective when it is personal. Talking through papers makes it very impersonal. Maybe you're eliminating corruption, but the maximum effect you would like to have when you are trying to use the word which Ajay used, when you're trying to persuade someone on your viewpoint. And that is missed in this faceless assessment. There's one question here which says that should states...
That is critical, as Thirumalai said. That, Go ahead, Vikram.
Yeah. No, I said there's a question here. Should states be, this is to Himanshu, should states be given autonomy with respect to agriculture in consonance with the 7th schedule? Why is the center interfering in this?
The states already have autonomy to a large extent on most of the issues related to agriculture. And so, I mean, our constitutional provisions are very, very clear. Center does not have the power to interfere except in the interstate trade, which is fair enough. And that is, you need a body which is outside the state to, and including on markets and including on other things. But I think at some level, the states, this particular time, and this is the complaint that most of the state governments have, that the center is encroaching upon their domain. It is not, it's something which is entirely in their domain. So I feel that every state has its own peculiarity, and I think the state should, as the better judge of what is required as a law as far as agriculture is concerned. I mean, I'm no difference in that.
I think Ajay, these there'll be.
What is the fiscal deficit that the finance minister? What is the fiscal deficit that the finance minister has projected, and how does it look to be?
I mean, it was.
Because I read somewhere that the fiscal deficit. Yeah.
Go ahead. Ask. Complete.
No, it was only about fiscal deficit. Yes, please.
So it was 9.8 this year. I mean, the estimates for this year, and it is going to be 6.8 or something like that, roughly around 6, around that, a little more than 6% in the next year, which is the budget has been presented for that. But they don't expect the fiscal deficit to come down for the next 3 years. So it is going to be elevated at around 4 to 6, around little more than 4%, 4.5%, till up to 24-25. So that's the ballpark figure that has been given by the finance minister.
This is a lovely question, because this question picks up from, I don't know who in us can answer this. Bill Gates did mention that this is not the last of the epidemic. And so has the new budget accounted for the unforeseeable prospect of a second corona wave hitting India?
I mean, very difficult to answer this question. And I think what we can do is not prepare for pandemic, but at least we can be prepared in terms of having the basic facilities. I mean, irrespective of the pandemic hits or not, I think education, health, food, access to skills, employment are something that a democratic country should provide to its citizens, not just with the fear of pandemic coming or fear of something that is happening. It should come as simply because these are what a democracy is all about, citizenship is all about, and this is part of being a human. I mean, I think we don't have to bring the pandemic in this.